Ladies and gentlemen of the crypto space, we're live on a Monday, November 10th at 3:16 p.m. in the afternoon. Better late than never. Get some content out, see what's going on in these markets, and the markets are telling a story as they always are. This is a remarkable perspective on the monthly chart for Bitcoin. It tells something that so many people are so afraid of. This is the longest bull market for Bitcoin in Bitcoin history. You could see that by observing the 10, the monthly 10. You could see the dark green moving average that is being completely respected. You see its respect during the 2020 2021 bull market cycle. And if you want to call the writing of the 10 SMA a bull market, fine, that's a reasonable statement. A 10 SMA on such a large, relatively long time frame is a decent definition for bullish market conditions. Now, obviously, you can see back here in 1617, you also had a breakout above the 10 SMA, and we held it to significant divergence into 2018. 1617 bull market topped in January of 2018 and had our big double top in 2020 and 2021 led to the breakdown through the 10 SMA, which lasted an extended period of time. This is the largest. Well, no, actually, it isn't the largest bear market. Look at the peak to trough. Let's look at that for the fun of it. Peak to trough, which peak to peak, better said. If I could get the right date range. So date. That's 1,000 days to get back to where it was. Can I draw today? 851 days. At least for the first interaction. It took several months, at least 6 months, to really break to the higher level. So maybe if we draw that, that's even more telling. All right, maybe it's literally about the exact same amount of time. How weird is that? Especially if you get that breakout, 1,127 days, 1,096 days. Isn't that ironic? You know, it's just maybe coincidence that the amount of time is basically identical for that breakout to occur. This tells us nothing with regard to tops and bottoms, and I think those are relatively useless inspections. What this does tell us is that it's something that most people overlook. Most people are like, oh my God, this is the longest bull market in Bitcoin history. And oh, that means it's almost over. Everyone's looking for the end because everyone's fearful. They got to get in and they got to get out before everyone gets out. And that is the most naive and idiotic perspective to have on capital management. That is not a sustainable methodology. There's no way you're going to survive in capital markets thinking like that. Got to get out before everyone else does. It's a race to the exits. What a silly mentality. There has to be a better way. And that's really what I've talked about over these last years. Way a more sustainable way to look at markets than, oh, I got to get out before everyone else does. All right, what does this tell you about markets? This tells you that the structure of the system is changing. All right, great. You got the Treasury Secretary of the United States basically screaming from his position that markets are changing. ETPs and which electronically traded ETFs, funds are going to have a pathway to propagate staking flows back to owners. Everything's changing. People don't even have a 1 year goldfish memory. What we lived like under Gensler. Oh my God. I mean, Gensler was the headlines. We don't even talk about the chairman of the SEC anymore. Does anyone know his name? I actually don't know his name off the top of my head. That just shows you how out of the limelight the SEC is. And that's probably the way the SEC always should have been. It shouldn't have been what Gensler made it to be. He was a spokesperson. He made it, he thought he was the main character or something like that. And he had so much attention. It's awkward. Isn't that change awkward? Don't you remember last year? Dare I say, the last couple of years of Gensler's media attention compared to our current SEC chairman? You don't hear shit anymore. Now it's all Besant from the Treasury, the money of the United States, the bigger position in the room. Isn't that wild? Everyone misses the forest for the trees. Oh, the market cycle is going on for too long. It's going to top. I got to get out before everyone else does. Meanwhile, the whole market is different. The whole structure of the system is changing. Oh, so let's show that post. What Besson just said, just said minutes ago. Issued new guidance giving crypto exchanges, ETPs, a clear path to stake digital assets and share stake revenue with their retail investors. Oh my goodness gracious. Eh, Everyone's missing the forest for the trees. Now you're not getting shit from Bitcoin unless you go on MicroStrategy and that dividend, which what is strategy at, like 10.5% per month? Some wild Ponzi-nomics there. But that's aside from the point. The point is there's new financial products and services that are available. And my 2 cents is I think this is a great point that I picked up on earlier today. Where is it? Aside from Warren Buffett's headline, I'll get back to that maybe. This was an interesting headline. Millennials now have net worths that are higher than those of previous generations at similar ages, adjusted for inflation. It's a very interesting metric, and I appreciate that metric. And am I better off than my parents? I guess maybe. I have unique circumstances in many regards, a little entrepreneurial. Um, but generally speaking, I tend to believe this type of headline because I'm cynical, meaning I think social media and I think headlines are mostly bullshit. I think you hear the loudest people the most, the people with the most or the least useful opinion. You hear them the most. You hear the squawkers. You hear the Karens and Carls the most. I don't mean that personally if anyone happens to be named Karen or Carl. I'm just saying. You hear the complainers the most. So I think the majority are actually in a relatively decent position of strength. And that's what this headline is expressive of. The silent majority. I think that's a decent phrase. Look, and then look, here you go. As in five of them? No, Millennium is a massive cohort. I happen to be the oldest of the millennials. The mean and the median, that's a decent observation. Um, I mean, it's just look at all the opinion, endless opinion. How many posts? 501 comments. But that headline speaks volumes to me, where I want to believe that most people's opinions are irrelevant and headlines are irrelevant and data is what matters. And if that's representative of the actual data, that's a silent majority, and that means a lot to me, especially in a world where Bitcoin on the weekly held the 50 SMA after last week's volatility down to $98,000. And everyone was pissing their pants that the cycle is over, that the market has topped. Meanwhile, this is the third time since Q3 of 2024 that we've interacted with the 50 SMA on the weekly. That is a bull trend if I've ever seen one. Now, if you go back to the monthly, you could see, obviously, there's also an interaction there. We look to the weekly for a little bit more granularity, but on the monthly, look at that, an even better interaction. Look at the divergence as well. This is actually a healthier market. Look at the massive divergence between October of 2020 and local top 2021, April 2021. Look how much diverged the price went from the 10 SMA. And look, thus far, there was no mean regressions, by the way. There was this giant mean regression over a period of months. But here in 2025, these three mean regressions to a moving average as a much healthier market. So on the contrary, people are like, "Oh, it's an extended market. It's got to get out before everyone else does." To me, this looks like a healthier market. And I mean, obviously, someone like myself and many people that listen have a very biased take because we've been involved with these markets since Bitcoin not being at $106,000. Does anyone remember last year when the ETF launched at $47,000? It was literally last year. So people have such short memories, and the market is changing very quickly year over year. Um, so I'm very comfortable when I look at this data that fine, things are changing. It's taking longer for euphoric prices to come to all the non-Bitcoin space, the total three space. But I don't want euphoric pricing. I just want a healthy market. Like if total three was a slow grind up, like curves at 50 cents, it's at a dollar next year, and it crashes to 75, and then it's at the end of 2026 at just a buck and a quarter. Something divergent from like exuberant expectations. Isn't that what everyone would rather see? And then a buck and a quarter crashes to a dollar, then a dollar to $2, which is 100%. And now we're talking about like normalization of price action, and that would still be significant outperformance compared to traditional, equities types of assets. 100% over what time frame? 6 months, a year. Um, but I would very much welcome normalization of price action. Uh, I don't necessarily expect it because I know the general public's retarded. Now, I I say that with hesitance because I know people are sensitive to those kinds of terminologies. But clearly, that's what everyone's expecting. They're expecting idiotic behavior, irrational behavior, behavior that's indicative of lack of critical capacity, a higher level contemplation of capital management. It's just emotional behavior, which is maybe retarded is not a good word. I apologize for using that word. It's stupid behavior. So I don't look forward to that. But I'm inclined to think that it's coming. And I think we'll get this divergence, this massive divergence. Look at this divergence. If you go price range, there's 164% price divergence from the moving average. What a disgusting divergence. We are literally at the moving average, the 10 SMA and the monthly right now. We so from an exuberant standpoint, there is literally no exuberance in the market. It's just a market that's marketing and digesting the amount of currency supply that's available, pricing things efficiently, and just humming along because that's what a financial market does. This market is marketing and it's not exuberant, so that's comforting. In fact, now folks should actually be remarkably comfortable that the market's at these valuations and it's relatively calm. Okay, so whereas most people, the majority, are wrong in how they feel and they're fearful, the correct observation to have is, oof, after last week, this is where we're at. After last week's volatility, we're at 106,000. We're at this moving average on a monthly perspective. We've had these mean regressions where this far diverged from the 10 SMA on the monthly, which is barely diverged at all. It's an extremely comforting place to be. This is the last place you're fearful. This is the place where you're comfortable. Now, obviously, this is an entire different equation. If you got 300 bucks in your bank account and you're thinking about what to buy, and you're aping into meme coins. So everything's perspective. Curve 49 cents. Zoom into the weekly. Looks lovely. That was not a mean regression to a moving average last week, but that certainly was a decent level. This is a very powerful level. The 39-cent level is what we hit. So I would say this entire inverted head and shoulders, I happen to draw it with the neckline more or less at 39 cents a long time ago. And we hit it basically to the tick. was more or less to that neckline, those wicks. Then back in September of 2023. Then back in November of 2022, the 39-cent price level, and obviously back in December of 2020. That's a very, very constructive price level to be at. It's not going down. And everyone's out there talking about supply. And yes, obviously the supply has increased. The price is not going down. Tells a story that's remarkable, that has strength and merit. And people should be excited about this story and where it is, where it's been, and where this asset's going with regard to its technological offering, what it does functionally, its fintech feature set. It's quite unparalleled. That's my 2 cents. By the way, gold's humming along at 4,100. That's crazy. And Velodrome was up 18% today, sitting on 13% gains. Why? Because today's a big week for tech. Aside from what Besson's talking about in headlines and the government reopening and all the bullshit headlines out there, you got Coinbase doing what they're doing and likely significantly integrating with the drones vis-a-vis Dromo slabs. And Ethereum's on board. It's Vitalik talking there. Oh my God. Um, Winners are chosen sometimes. And mm, uh, who would you, if you were to choose a winner, you're going to choose Uniswap, Dromos? I think Dromos makes the most sense, even more so than Curve. You don't need, Curve doesn't need to be chosen. Curve is a federation. It's already been chosen by the market. The actors in the market, the other protocols have already selected it. And they are why the price isn't down. Curve is not the same story as Dromos. It's a different monetary policy. It's a different protocol. The alignment of incentives, the way it functions, and the business model. It's a completely different operation. I'm very curious of Dromos Labs coming to mainnet. I would love to see Velodrome reintegrate with Aerodrome. I don't know how that would work. I would not be surprised to see some sort of technological offering or something proposed or something already in the works. I'm not surprised by many things nowadays. So bring on the tech this week. I don't think there'll be significant disruption to Curve by a drone coming to mainnet. I think that'd be very interesting. I think the biggest business of Curve has nothing to do with foreign exchange, really. It's more about a vertically integrated set of features around dollar liability printing. At least that's what it has become, and that's okay. And maybe it remains overwhelmingly stable swap with support for crypto swap and all the fancy crypto swap NGs and the LP innovations that have come over the last years. But it always started as stable swap, and that's what it really has done so well recently. If you want, if you want to issue liabilities, you need a capacity to finance liquidity. You need a capacity to issue credit, which is slightly different than issuing the liabilities, um, lending existing assets versus creating new liabilities. That being, um, so you need the stable swap software to support all of that functionality. You need it in house because otherwise, what, you're going to use someone else's platform? That's what so many stablecoins have done. So Curve's just an in-house, full stack, vertically integrated stablecoin factory. The only thing that comes close is Frax, and Frax has its own damn network. That's another story. I don't want to complicate the conversation, but it's not that a drone coming to mainnet would disrupt Curve in any way, in my opinion. And I look forward to what tech comes this week. So this is a big week. You got two of the biggest things going on. You got Dromos or whatever the hell they're cooking up, and you got Yield Basis iterating and getting through the governance proposals and getting towards liquidity financing to get the CRV-USD liquidity depth required for the credit expansion to yield basis such that more Bitcoin can be allocated and more liquidity depth on yield basis. You get better stability on fees, as Mitch has talked about, and the protocol gets entrenched, begins to build lendiness and trust and more allocations. And as trust builds, I'm sure the credit line will expand and more votes will be applied to finance liquidity, and more liquidity depth will be there. Therefore, everything spirals constructively. And that's what I look forward to seeing. So that's part of the tech. That's this week. It's every week. This governance occurs every week. It's not every week that you get a Dromos announcement. So I'm really excited about that one. That's about it for talking points, opening monologue today. I noticed maybe I'll go through some my X posts, and then we'll do some commentary. Keep it a little short in the afternoon. There's no aftermarket VE Velo NFTs available. There's nothing. No one's selling anything. They've all been bought. Arrows coming in light as well. There's nothing. There's 13,000. There's nothing available. VE Arrow, 17% discount. Maybe those will get snatched because of flight school. Did flight? I don't know if flight school is coming in at better than 17%. We could take a look real quick. 15%. Okay. These might get snatched at 17%. All I know is I was able to take advantage of a 38%. It's one of these. It was maybe it's 34%. A couple of folks got the 41 and the 44%. Some folks got some serious flight schools. And then before me, way before me, was a 53% flight school. Wild numbers that people got. And now we move forward. You got the few of the original that bought sub 10 cents. And those guys are long wealthy and with serious cash flow. And then folks that got in at decent prices, lucky enough to pull the trigger at a buck oh 07 on Aerodrome. Where was the best opportunity? Best opportunity was probably on this drawdown right here. This you would have never known. You never know that it doesn't go any lower. You have to have balls of steel to buy on a dip like that. But when you see, you see something like this. See this right here, confluence with this, and then you see resistance and then a support. All right, fine. That was my argument, and I think I don't know. I got somewhere around here, 60 something cents, 63 cents. Geez, I saw it up at a buck 15. Crazy from 63 cents to a buck 59, and now we're at a buck oh 07. Volatility will drive most folks mad, but this was the opportunity, in my opinion. Um, this is clearly a decent level, decent resistance. So resistance, failed break. This entire thing is a failed breakout. This entire thing is a failed breakout, failed breakout, failed breakout. I mean, you could even chalk this up to a failed breakout. So this 80 cents level is pretty interesting. But what do you see here? Resistance, resistance, breakout, retest. So this is basically the breakout, retest, and now you want your higher high. Obviously, no one in their right mind should probably wait to buck 70 but for a trifecta of bullish confluence. But that's what it would take. That's how volatile this asset is. Wild volatility. But there's your breakout, retest, higher high, because the retest is at this 80-cent level, because that's where you have a decent congestion of price action in earlier summer of 2025. Decent congestion of price action. Anything else interesting going on? Convex, just bottoming, range bottom. Buck 90s, blow off bottom, serious blow off bottom. If you got that anything down to the 50s, that was insane. Yeah, but that was your 18-cent curve day as well, and that was your 98K on Bitcoin day, and everything was just falling out. It was your liquidation a couple weeks back. Um, Move at 74, bump up, downward trend on the weekly 10 SMA. Everything looks on track according to headlines. SOFR rolling over should lead to move rolling over, should lead to a bid in the 10-year. QT coming to an end in December. QE, if they do anything that's comparable to it, any bid on duration or any recomposition of the yield curve, any buy pressure whatsoever, or any hint of buy pressure whatsoever should influence the market. So we're at the stage where you have positive influences and not negative influences, which are supportive, which are tailwinds rather than headwinds. DXY below 100. I don't think the market, I don't think we really see cycle bottom or cycle top, so to speak, until you have a real big move down in the dollar. Yeah, there's no, this isn't capitulation. This looks like a bit of cyclicality down to about an average level. Horizontal line. Come on, look at that level. That's not capitulation. Capitulation is 89, and everyone's like, holy crap, the dollar's rolling over. That's like when Bitcoin, if it blows off to 250, everyone's like, oh my God, it's not going to stop going up. But when Bitcoin last cycle was in the 70s, and everyone was like, it's not going to stop going up. That's a capitulation. It's not going to stop going up. It just, could you imagine the sentiment if you weren't around? If you weren't around here, so if you weren't around here, so this was November of 2021. We were in April of 2021. We were at 64,000 at the wick, and we're, oh my God, it's gonna go. It's gonna break out. It's gonna go for a higher high at the end of the year in 2021. It's gonna keep on going. There's your capitulation, where everyone's like, it's gonna keep on going, and everyone thinks the party never stops. That's when the party stops. The party doesn't stop when everyone's bored right now and everyone's like, "Oh, it's over. Oh, I shouldn't allocate it. It's over." That's not when the party stops. Well, the people are wrong. The majority is always wrong. What a shame. But we'll be right because we think different. Arrow, good afternoon. Much a pleasure. Eric, Ponzinomics, that's a new one. I hadn't heard before. Well played, Cap. It's a old phrase, but oldie but a goodie. There's a Zorg, oldie but a goodie. We had a good talk in Discord about 20% being 20%. Classic message is finally starting to stick about exposure being enough. If APR is the same, basically, what's the difference? Well, there's your XYZ. That's your Z. How much is it paying? And how likely is it to continue to pay? So if it's paying 20%, something else is paying 20%, something else is paying 20%, which one's most likely to continue to pay? That's all that matters. You want the strongest capital allocation. That's it. And that's going to attract the most capital. And that's going to be the most stable, rational investment for a period of time because other people are going to invest in it because they see the same things you see. Makes sense. But they are kind of disappointing. Yeah, it was all fizzle. We could have seen that, and we did see it because we look at the most important thing, which is liquidity. And liquidity isn't the famous social media talking point liquidity. When we look at crypto liquidity, we're looking at the amount of dollars in a market. The amount of dollars on the Linea market is microscopic because the amount of dollars in any market aside from Ethereum mainnet is microscopic. So I haven't pulled up the llama in quite a bit. I don't want stables. Yeah, this is fine. All right, so where are we at? God damn, $167 billion. I mean, let me explain something very simple to you. If you see any social media influencer talking about Solana, BSC, hyperliquid, base, arbitrum, polygon, avalanche, plasma, SUI, whatever, ton, mantle, OP, sonic. It doesn't matter. And they're talking about, oh, this is the next big they're full of shit. Why do I say that? Every single chain combined is smaller than Ethereum mainnet. Ethereum mainnet has $167 billion. The largest network aside from Tron is Binance Smart Chain, which has $13.36 billion. And then comes Solana at 13.89. 13.36. Why is that out of order? That's usually never out of order. Solana is the largest market. Tron doesn't count. It's a different does different things than people think. Solana coming in at 13.89. That's a big number. That's a massive number. But if you add up BSC, Solana, Hyperliquid, Base, Arbitrum, Polygon, Avalanche, Plasma, all of them, it's smaller than Ethereum mainnet. Ethereum mainnet is the main event. Anyone who doesn't understand that does not understand how to survive and where the money will flow. And sure, you have a massive capital rotation to Solana. It goes to $20 billion and boom, you get your exuberance and you can make a fortune. That's great. But I'm not here to catch the hype. I'm not here to catch a wave. I'm not here to make a fortune. And that's what folks may miss, hopefully don't miss about how I talk about markets and capital management. I'm not here to catch a rotation to Solana and turn $1,000 into $1 million. I'm not here to do that. I'm here to manage my capital in the way that makes the most sense so I could sleep at night. Therefore, the most rational allocations are to mainnet with regard to size. And then you could diversify. And you have your allocations that are further out on the risk curve. They can do those kinds of multiples, big multiples, especially under exuberant bullish conditions. 10x's, 100x's, 1000x's on the money. You'll get those off mainnet. And frankly, my 2 cents, you probably get those on mainnet over the next couple of years heading into 2030. You just got to have a reasonable, rational time horizon and a reasonable asset accumulation strategy, such as rule number 1 and rule number 2 combined. Own more assets over time. You'll have more assets heading into 2030, and those assets will appreciate over time. And if they adhere to rule number 3, they will pay you. R2D2, hi Cap. What do you think of the recent Contango meltdown? That's a balancer issue. I like Contango. It's a derivative product. My 2 cents is, and my official capital management choice is I no longer have exposure to Contango. That's nothing to do with Contango. I like Contango a lot. It's one of the few derivative protocols that I've ever chosen to have an allocation to, and I would uh, I have literally nothing negative to say about everything they've done and tried. I just don't favor derivative products. I want to own foreign exchange, credit, liquidity financing, and liability printing businesses. 4 businesses, but there's 5. The fifth is derivatives. And I just shy away from derivatives because derivatives is one of those businesses. So notice what Contango does. It's basically leverage credit on top of some sort of LP position, farming points and whatnot, and looping, which is leverage. So it's using one of those other 4 crypto businesses in a derivative form. So I was they gave me the offer to leave, and I chose to leave. That has nothing to do with a negative opinion I have about the product. Hope that helps. When you cure the concept of bull and bear, 20-30% performance is extremely comforting. It's just volatility. Heading into 2030, I just can't fathom my portfolio not being at least 10x larger than where it is now. I mean, that's 2030. I mean, look at what these people are talking about. When I say these people, I mean the politicians, and I mean the regulatory authorities, and And the commissioners and the pundits and the social media, the mainstream media, oh dear, that portfolio is 10x into 2030 seems woefully underestimated. I should think a very healthy, reasonable expectation. So guess what? If you're in your 20s and if you're in your 30s and you work for your 20s, 10 years of your life, you know, got done with school and whatnot, had a couple of corporate jobs, have some rollover IRAs from 401ks, because obviously that's what we do. We invest as we get older. You're in your 20s and you're making smart decisions. You're not spending more money than you make. You're spending less money than you make, and you're saving and investing, and that's what we should be doing in our 20s and 30s. Then over the next 5 years, you could expect a significant growth of your investments, unless you bought fucking meme coins. Okay, so obviously this is, what I'm saying, guys. We're talking about investing here. We're not gamblers. So well said, Dean. As always, Dean is a regular on our Discord who is one of few that have truly accepted the reality of ownership rather than a position. I choose to buy things, and these are permanent allocations of capital. And I think that is salvation for our mentality with regard to capital management. I own things, and I will continue to own things, and I will continue to own more things, because if you own nothing, that says something, folks. Choose to own things, just as you would metaphorically say, own your losses, own your wins, own your victories and defeats, own assets. What does own mean? You're trading, you don't own shit. Now, what do you tell people? What do you do? I trade. Does anyone take that seriously? You own. I own businesses. Anyone asks me, I own businesses. Meanwhile, well, how do you own those businesses? You go on Coinbase and you can buy them. And then like, what? Not crypto? Yeah, I own businesses, fintech businesses, credit, foreign exchange. These are derivatives. These are big banking products. And you can't even buy on Wall Street, and people won't understand, and they never will, and that's okay. And that's the story of every wealthy person's story in 10 years from now. What did you own? Yeah, I own shit that nobody understood. I own fintech businesses, banking products. Thoughts on you joining in more on Twitter Spaces could help with never-ending retarded takes out there. Depends on whose Twitter Spaces. Uh, Mine, sure. I don't really do many spaces. I do my stream. Other people's spaces, I've tried. Like I've talked on because Bitcoin. You guys know I talk on because Bitcoin every with Max and Wabi. But I don't want. I like to hear my own voice. My wife always says that, and it's very true. And I don't have any intention nor interest in convincing anyone else of anything. I don't want to conflict or support or contradict anyone else's opinion. I just want to talk about my opinion, and then everyone's welcome to have their opinion about my opinion and factor in everyone else's opinion to come up with a derivative opinion. Because ultimately, my opinion is a derivative opinion, and everyone's opinion should be as well. And we should all have constructive opinions. Never ending retarded takes on Twitter spaces. I can't help with that. Just don't listen to them. There's very little signal out there, mostly noise. It is what it is. But if you have a recommendation, and you want to invite me, you see something and you ping me and on X. All right. Tell everyone else. Invite the captain. All right. Stop by. Like end of workday, 5 o'clock. That's a bad time. Um, get my kids to sleep like at 8 o'clock. It's a bad time. After that, I'm freaking exhausted. It's a bad time. I like to go to the gym after I drop the kids off at school in the morning. That's bad time. Not much time in the day. Just not much time in the day. Sad reality. Arrow, Uni announced fee switch, token reduction. Let's see if he comes. Who cares? Who cares? What does it do? Yeah, the big sell of V4 was hooks. The big sell of Uniswap, especially V3 going forward, was third party integration. That's basically where my mind is at right now. You realize that. So obviously their front end and people that have no capacity to do better go to uniswap.com to do their exchanges. They don't know about CowSwap. So, but I think the equation changes with the Dromos announcement because why are people launching on why are people launching meme coins on Uniswap still? I think if Dromos could disrupt that, then Uniswap that they will eat their market share. They will just eat it. It will just get slurped up, milkshake style. Bye bye, because that's where all the market share comes from. Otherwise, they don't get the routing. Uniswap doesn't get the routing. I mean, look who's top. Who's top on base? Who's top on optimism? Uniswap is only top where the drones are not. Interestingly enough, but that's another story. I don't know. No interest. It's not investable currently. Therefore, XYZ is non-existent. No interest in Uniswap whatsoever. Any concerns that more protocols have not bought into V Curve or CVX in a long time? Yeah, there's always a concern. So my mentality with regard to my ownership of VECRV is that I am fortunate enough to not have to think about it. I cannot make a choice. I cannot own less. I cannot exit. It is not a position. It was a purchase. It is done. I have no need to think about it. So I think about weekly revenues, but I don't obsess over them. I don't like, oh, I wish it was more. Oh, damn it, it's not enough. And how do I get more capital? It is what it is. So serenity is a very powerful position to be in mentally. Very hard to attain peace of mind. Um, it makes revenue. If I wanted more revenue, I could buy more revenues. Would I diversify into a drone or more BECRV? I'm not, it's irrelevant at this point for myself. I'm not in a buying position. If I had capital, I'd probably just Warren Buffett things for a bit. I probably want more cash so I can make a better choice if an opportunity presents itself. There's a comes a point where you have to find the comfort that you own enough, and uh, and that's you'll never own enough. So what does that mean, folks? uh, I don't own enough Bitcoin. I don't know. You've heard this phrase on social media, but people have to draw a line. You have to find that limit psychologically. Otherwise, you will forever be seeking, forever be searching, forever be yearning for more, and that's not healthy. Y'all got to find that point when enough is enough. So that's my 2 cents on that. So I'm not concerned whatsoever because I have no capacity to make a decision. Therefore, I have serenity over the matter. I make revenue. Great. Is a good choice. And I have other choices that make revenue as well, and including the kingdom choices. And I look forward to Ramsey's drop, and I think Sonic and Shadow and look, that's how much we use it. EtherX. I think these will do fine over the coming years. They getting destroyed? Of course they're getting destroyed. They're brand new. They're brand spanking new. What do we say? We've talked about this. You know we've talked about this. You don't know how anything's going to do until it's gone through a cycle. What is a cycle? 5 years now at this point. So what's the only thing that's lasted a cycle? This curve, Uniswap. Those are the things from 2020 and 2019 for Uniswap. This comes back to Friday's stream of the 2019 conversation, ladies and gentlemen. Most of you are frantic and worrisome about protocols that are just launched. 22 for the drones, 23, 24. None of this existed prior to 2020. So, all right, check back 2030. You can't, eh, 10 years. That's an investment. That's you need some time frame. That you want to make it big and be healthy mentally, invest with a 10-year time horizon. Otherwise, you just expectations are too high or the emotions are too high and it's just not stable. It's not sustainable. Most important thing is can you sleep at night? Okay, guys? Hope that helps, dude. How big do you expect RWAs on Ethereum can get in the next 12 to 24 months? I think 1 to 2 trill. Uh, I don't think in terms of targets. I think in terms of up and down. So my expectation is more. Simple. I expect more over the next years, period. XRAM TGE coming on Wednesday. Should be interesting to see if there's a premium with it. So what do we got? We got the Dromos event. We got XRAM TGE. We got Curve and um, oh my God, Yield Basis Governance. This is an awesome week. It's such an awesome week. It's always an awesome week. That's the reality of things. I look for things to be excited about, to be content about, that I understand that most people don't. And I see this as a great week. This is not a week of, oh, the end is near or to be in despair. And this is a week where you see those stupid coin fashions. You see these? I retweet them every now and then. It's just so pathetic. All you had to do was buy more assets and follow the rules. So may God bless every one of the 214 people that listen to me, because you are a small minority of a minority of a minority in a microscopic cohort of a community. Because the majority are shot, the majority are done, cooked, beaten. They will not succeed. The majority will lose. The majority always loses. Congratulations for being the minority. You have a greater chance of success than the majority. Simple as that. I think Contango is fine looking at this market cap. Token price is relative. You need the stake for collecting rents. It's not a token that will rise much unless emissions are over. Yeah, the emissions. I don't want to be critical of it. I just I wish I could. I like that cash flow. I like that derivative cash flow. Um, I just wanted. I I opted out, and that's okay. You don't have to own everything, and I took a large loss on that, and that's okay. You don't win everything, and I'll sit back, and the market will make my portfolio what it's going to be. I am not in the driver's seat. I am not in control. It will be what it will be, and I am okay with that. And that is a healthy mindset to be in. That's what I'm debating right now with Rex. I've TP'd a bunch, but do I ride to Hades or just sit in cash? Um, I mean, listen, you get a $500,000 drop on X round. Come on, sell off like 300 grand of it. Sell off 400 grand of it. That's sell 80% of it. Okay. So there's some simple math in there. If you got a large windfall, take the windfall. Um, that's at least where my mind is at. Um, and then guess what? It'll be the first Kingdom project to go up and to the right because of the hyperliquid narrative and the volume there and the flows. And then you'll be like, shit, I could have had millions. And you're like, all right, I took out 400K. Fine, it's okay. Because now you got a 100 grand position that in 3 years' time is worth $1 million, cranking out 200 grand a year, 20% APR. So the point there is, what is success? What is good? What is good enough? And that failed scenario, you get a $500,000 airdrop that could have been worth like 50 mil. Oh, the horror! You took out 400K, and the 100K is worth a mil, and you pull in 200 grand a year. Come on, that's good enough, guys. Guys, you gotta find what good enough is. You gotta find what good enough is. That is good enough. I swear I wouldn't know what to do with a $500,000 a year in revenue. I don't know what to do with it. Now, obviously, this conversation would change in the coming years as consumer price inflation adjusts and whatnot. But as of right now, I wouldn't know what to do with that kind of available capital. And I sure as hell like to go on cruises, and I just wouldn't know what to do with that amount of money. And that's probably including like my kids' private school and whatnot. It's just- So the point is, guys gotta know when enough's enough. That's probably what's that? This is some biblical shit right here. Be humble and stuff like that. I'm not a biblical person, but I like those commandments and whatnot. My daughters go to church, send them to Catholic school. My family's history is Jewish roots, and but I never went to temple. I never did any of that stuff. But there's some great uh, ethical things and sense and great lessons, being humble, and those very fundamental ways of life that are taught in the ancient texts of our forefathers. So I love that shit. So maybe if I give you guys any good words of advices, look to those types of things. And whether you're mystical or whatnot, that's not the point. The point is, be humble, help thy neighbor, be considerate, be empathetic. These are all good qualities. Don't be toxic empathy. Toxic empathy is why this country is in a shitty situation. But you should be empathetic, and you should be helpful, considerate, and kind, and compassionate, and know your damn limits, and be humble, ladies and gentlemen. Even though Base's BTC staking looks sweet, everything in my experience tells me not to convert real BTC to a tokenized version of either. I agree. I opted for exposure to yield basis. So I had my Bitcoin and I applied it to the yield basis protocol. And I I'm just comfortable enough with whatever the hell Mitch does. I am a software engineer by trade for my career. What he has done changes things. There's every once in a while someone builds things and has a mind that's capable of building things that's different. He is different. His software constructions are different. His mind operates differently, and I am comfortable with that difference. That's my 2 cents on what he has built. But I agree with the sentiment, tape pusher. There's some fear in that. I just don't have it, better or for worse. Arrow, my man. We haven't experienced the 10x. Yes, I agree. Yet, well, also, we're nowhere near the enough is enough. Yeah, but I am. Like, but enough. What is enough is enough? My enough is to follow the four rules. I cannot do anything more than follow the four rules. My available capital is a manifestation of following the four rules. Therefore, it has nothing to do with the amount of capital that I receive. I'm grateful for the fact that the amount of capital I get is greater than zero. My net worth is almost my net worth is the available cash I have. You guys get that? If I bought a $500,000 worth of something that's locked, it's worth zero. It contributes zero to my net worth. You might see it in like D Bank, but it's zero. It's worthless. You can't sell it. If you can't sell it, it's worthless. So the only number that matters is the amount of cash flow you get. And That's what I always used to try and teach people about buy a salary. That cash flow I get is greater than zero. And if I make a couple of $1,000s a week in salary and I make a couple of $1,000s a week in cash flow from assets that I bought that are purchases, not a position, that's fucking crazy. That I bought something that's about the same as my salary. That blew my mind when I started to think like this back in 2021. Buy a salary. Now the only thing left on the equation is tax optimization, and that's a conversation we've had that most people think is illegal, but tax avoidance is completely legal. Avoidance is not evasion, and that is probably the best exercise so many folks could go through. Because once you figure out how to make money, next you got to figure out how to prevent other people from taking your money and giving it to other people. Because the last thing I would ever want is to just give my money to other people. Now, I just went through a whole laundry list of shit about, biblical um, morals and ethics. So I'm an empathetic person who's a charitable person. I don't agree with just blanket taxation, and which is charity. I'm charitably giving my money to who? I have no idea who. I don't agree with that. I want to know. So when I have my Children's International and I have my two kids in Children's International, I know who they are. I know where they are. I know what they're doing with my money. And I can have 3 kids, 4 kids, 5 kids, and I can help feed them. I could give money to a person on the street, give him $20. He could buy booze or he could go to Wendy's, his choice. I could give to whatever charity, um, the children's hospitals, which I do. But I know where my money's going. I sure as hell am not okay with not knowing where my money is going. So I will fight that as best I can. Eric, humility and being appreciative of even waking up goes a long way. Thanks for preaching it, Cap. That is the most important thing in life, ladies and gentlemen, to be able to sleep at night and be able to wake up with a clean mind. If you cannot wake up and feel strong with energy, do some exercise, we're missing something in the day. So, ladies and gentlemen of the crypto space, find your humility, find your strength, sleep well, exercise, be healthy, follow the 4 rules, recognize the 5 businesses of crypto, dare to be different, not like the coin fashions we see on the screen. I've lost it all pretending I'm doing well. I look at my old addresses occasionally. Old addresses, if you bought assets in 2020, you should own the same assets now and more of them if you followed the 4 rules. And dare we say, if you started earlier. And I didn't have this mentality in 16, 17, but you can imagine if you start 4 rules in 2020 and you bring them into 2030, or you're in your 20s and you for the next 20 years and you check back in your 40s, you're going to be sitting on a pile of assets just by thinking differently. Dare to be different, and you will achieve different results. Monday, November 10th at 4:15 p.m. Thank you all for joining me today. 225 people made it to the end of the stream and are now all that much more rational because of it. I wish you all a wonderful start of the week. I will see you guys and gals later at the end of the week. Until then.